All right, what is up, tycoons? What's up, traders? Super excited for today's video. We're actually going to go over a gold miner ETF. We're going to take a look at ticker symbol GDX. This actually is a viewer request. I do viewer request every single week. So if you want to see your stock, your crypto, your bond, commodity, whatever it is in the next video, all you got to do is comment down below and I'll get to it as soon as I can. Now, what we're doing is we're looking at two possible scenarios here for GDX. All right. We're going to take a look at a bullish scenario and also a bearish scenario. So that way you guys can be, ready for the next move, whatever it is. There are two structures that I'm seeing here currently. We could be getting a 5-wave bullish move, all right, and that's going to be tracked by the white line, or we could be getting a 3-wave bearish move. Now, the market, usually tends to follow a pretty good structure, right? So meaning, it usually moves in either a 3-wave or a 5-wave pattern. All right. So obviously we have our 3-wave scenario right here, and then we have our bullish 5-wave scenario. But you may be confused by these sets of yellow lines right here. What these are these are the major Fibonacci retracement levels. And you use these because nothing really goes in a straight line down or in a straight line up. You either get a move up, retracement, continuation of the trend, or you get a move down, retracement, continuation of the trend. So the 61.8, the 50%, and the 38.2, those are the three most common and well-respected retracement levels. There are others, but especially if you're new to using the Fibonacci levels, these are going to be some, the three most common and well-respected that you can use. So now that we've established that, what we're going to do is we're going to go over why I have them at these levels. So we have our swing high here connected to our swing low. So obviously we had a very large move to the downside, and then we got a pretty strong rally. Okay. We went from about $22 up to near about $34. Okay. And that's a pretty impressive move. All right. But if you take a look at what we did. We actually just came up near the 61.8% retracement level of that entire downwards move. If we would have, started consolidating up here and then broken through those levels, we could have spotted a reversal, right? Because we talked about the trend continuation earlier. But if you move down, retrace, consolidate, okay, and then break through those retracement levels, that's how you can spot a potential upside reversal. So rather than getting, that consolidation right there and breaking through those, we actually just rejected right around that 61.8% level. And we've started a drop lower, and we've made a low and a lower low now as of here recently today. Now, things could change at any moment. But so far, it looks like that trend continuation could be playing out. Now, the big thing that we have to ask ourselves is this just a healthy pullback, right? So we had that really strong move to the upside. Okay. And we're still in actually healthy retracement territory for the smaller uptrend. Okay. So we do have the potential to actually come through, consolidate, and break through those levels still. But we need to hold above these levels. What we've done now is connected our swing low from here up to our most recent swing high. And so we've got the nice move to the upside. If we pull back, this is all healthy retracement territory. These three levels are going to be 2608, 2748, and 2889. Now we've broken through the first two support levels for our smaller uptrend, but we're still above our 2608. So below 2608, we're going to be bearish, okay? And if we break through this, flip it to resistance, okay, then we're going to be bearish, and there's a high likelihood we come down and fill this blue box right here. Now, what this is this is a gap on the daily chart. So, I love to draw these up. Gaps fill about 90% of the time historically. The big question is when they're going to fill, not so much if they're going to fill. There is that 10% chance they never fill. But the real question is when, right? And so it could take days, it could take weeks, months, it could take years for something to fill, whether it's an upside or downside gap. So if you see, we've got this gap here to about $23 roughly. If we break below that 2608 level and flip it to resistance, most likely we're going to come down here and end up filling that gap. All right. Now we do have a gap to the upside. So if we end up staying above 2608, all right, and consolidating and able to break out, get past our 61.8% retracement level, which is 3401, let's just call it $34, is going to be a huge resistance level. If we're able to break out from this level, flip that to support from resistance, then we have the chance of filling the upside gap up here to about $36.80 roughly. So it's a big range in where we could go. We could go all the way down to $23 over the next few months, or we could go all the way up to $36 over the next few months. It's going to be really important to try and figure out which structure we're going to end up getting, right? If we're going to get this bearish structure or if we're going to get this bullish structure here. So pay attention to your key levels of support. Pay attention to your major levels of resistance. Now, some other things that you can look at is going to be your relative strength index, right? And so this dotted line here is the oversold level at 30. That's a technical definition of oversold, not me just saying, hey, the stock is oversold. And then above 70, above this dotted line here, that's going to be the technical definition of overbought. So if you take a look, let's look at the last time we were oversold, and we see that we ended up getting a small bounce. Now, it didn't turn into a reversal, okay, but we did get a small bounce, ultimately continuing down lower. Now, over here, we're oversold for multiple times for an extended period, and you can see we continue to actually head lower, even though we're oversold, but eventually we get a nice little bounce, and we get a nice little bounce, but ultimately continue that trend, right? So just because something is oversold, okay, right here, we can see we're oversold, we still continue lower. It doesn't mean that you have to go higher just because you're oversold. And the same thing happens for when you're overbought, right? We're at these overbought levels right here, and you can see that we continue to actually go higher. We come up to overbought levels again, right? And we continue to actually go higher. And then over here, we're overbought, and now we've actually started to pull back. So this could just be a healthy pullback because we were overbought so many times here recently in the past couple months. And we're just pulling back to our major retracement levels to continue higher. But if you take a look, we're very oversold now, right? We're below 30. And we took a look and we saw last time we were around this level, we did up getting a small little bounce. So we have the potential for a bounce based off the RSI. We have the potential for a bounce based off of our major retracement levels. But if we just get a bounce and then come back into oversold territory and keep coming back into oversold territory, most likely this thing is just going to continue heading lower and be a choppy ride to the downside. But we're oversold. We could end up coming up and starting our next leg up for the bull rally to go ahead and hit those upwards price targets. So, there's a couple different things you can look at. Hopefully you learned something new in this video. If you did, smash that like button and subscribe to the channel. I do these viewer requests every week, so comment down below, give me the ticker symbol, and I'll check it out as soon as I can.